Well, hello, everyone. Cynthia Tomaine here with Interactive Brokers, and thank you for joining today's webinar being brought to us by BATS, the proven retail exchange operator. Now, I'm very pleased to also have with us here today a colleague of mine, Craig Rose. I'm going to put Craig's information up on the screen because if you do have any questions about trading with Interactive Brokers, here's a contact for you. Now, Craig is going to introduce today's presenter. So, Craig, if you can tell us about our presenters here today. Thanks, Craig.
Thank you, Cynthia. Interactive Brokers would like to take a moment to welcome Bill Cody, Director of Sales and Institutional Relationship Management at Cboe Global Markets. Bill previously developed and led the institutional outreach program at DirectEdge before its 2014 transaction with BATS. Prior to DirectEdge, Bill served as Executive Director at broker-dealer Instinet, where he held a number of key positions since joining in 1999. His roles there included being head of the broker-dealer sales and trading desk, as well as the dark pools. During his 13-year tenure at Instinet, Bill also worked as Vice President of Institutional Equity Trading and as a Product and Sales Manager. He has over 20 years' experience in the equities market. He's a board member of the Security Traders Association of New York and Options Industry Council. And now I'd like to give the floor to Bill.
Thank you, Craig, and thank you, Cynthia, as well, and thank you to Interactive Brokers for providing us the opportunity to speak to you today via this webinar. One of the things that's always been important to our exchange group is creating greater awareness about what we have to offer to the host of professionals in this industry, and the opportunity to speak to you today aligns itself well with what our end goal is to educate and make folks more aware. Unfortunately, we don't have the brand name of a NYSE or a NASDAQ. If you were to ask someone walking down the street, name three of the large U.S. Equity exchanges, they'd probably say NYSE, NASDAQ, and I'm not sure. The irony there is that from regular trading hours, intraday, not including the closing and opening auctions, we are the largest U.S. equity exchange group, typically with market share for intraday trading of upwards of 22%. So this opportunity to speak to you and do these types of events are always welcome and well received. I would encourage you to put any questions in throughout the presentation today, and I'll do my best to answer them. So with that, the goal is to help you understand what our company represents. So moving to the presentation here on slide number 2, the first one, I'll give you a brief overview of who we are. So I made mention of our large U.S. equity presence. We do have several options exchanges as well, and we are the #1 options market in the U.S. We also are the trading home to SPX and VIX options, so a tremendous offering there across multiple asset classes. We also have a futures exchange, which we are currently in the process of replatforming onto BATS technology. Actually, I'll take a step back here real quick. BATS was acquired by Cboe earlier this year, and we are in the process of doing a whole rebranding exercise, so you'll probably see Cboe throughout this presentation, but still, most folks on the equity side know us as BATS. In Europe, we run the largest pan-European equities exchange by market share. We trade over 4,500 securities across 15 markets. We recently engaged in a partnership in Europe with BIDS Trading, which you'll recognize is a U.S. ATS here in the United States. The partnership there is quite innovative, and it's bringing the opportunity to trade in larger size through this BIDS and our European platform. In the U.S., which is a bit of the focus of this presentation today on the equities business, as I made mention during regular trading session, we are the largest exchange. When the closing auction occurs, unfortunately, we dropped to number 2 behind the New York Stock Exchange. So we are the number 2 exchange group when you look at all of trading throughout the day, including closing auctions. One of the unique things that we will speak about today in some later slides is our growth and focus on the ETF business. But we have 4 equity platforms in the United States, all of which are slightly different, but we'll get into that a little bit later. And lastly, to round out all of the asset classes we are in is FX. We acquired Hotspot from Knight Capital Group about 2 years ago, moved their technology onto the BATS platform. We've seen a nice increase in their business where they trade upwards of 60 billion notional daily. So another important asset class in the Cboe BATS product offering. So from there, we'll move on to our next slide, which talks a bit about just the landscape across equity exchanges globally to give you an idea of how large we are in terms of notional traded value. You see NYSE there at 1.1 in terms of notional value traded. We're not too far behind them and NASDAQ. So just to give you a context of exchanges across the world, the BATS Cboe complex is very large. Moving to the next slide, which shows a bit of the history of how we came about. We're a new exchange, and hence what I mentioned earlier about the branding. It's important to us, and name recognition. So we were thought in Missouri back in 2005, and then moving from an ATS to a regulated U.S. exchange in 2008. We've done some key acquisitions and built out some new offerings to help increase our breadth across the U.S. equity landscape. And then in 2011, acquiring BATS Triax in Europe to build out our European business. Some of the key things that have happened over the last few years is our commitment to the ETF space, when our CEO, Chris Concannon, in 2016 made an announcement both in the press and at conferences about our commitment to the ETF business. As you see, it's a very growing and important area within the equity landscape. We shortly thereafter acquired ETF.com to further build out our branding in that space. And then most recently being acquired by Cboe, which adds those other asset classes which we didn't have before, other than equities and some options and foreign exchange. We're in the process, as I mentioned, rebranding, looking to introduce new products, some new futures-related products. One thing you see in the press on a fairly regular basis is Bitcoin and the value of Bitcoin. We filed with the regulators to introduce a Bitcoin future on our CFE platform, and then hopefully down the road maybe a ETF Bitcoin offering as well. Moving on to our next slide. Again, it talks to the overall size of our exchange group. As you can see, in Europe, commanding 22% market share across pan-European equities. And then in the U.S., as I made mention, intraday, the largest exchange group, 20.6 on average in the month of July. Probably a bad month to choose because it was the summer where market volume is a little lighter and volatility lighter, so more trades off exchange. But nevertheless, a big presence in the U.S. for intraday trading. I see a question popping up here with regards to the other category. So that other category represents smaller exchanges outside the big three of ourselves, NYSE, and NASDAQ. In there, there's the Chicago Exchange, but also probably the biggest component there is IEX. I'll just share a little color on IEX. They're an interesting exchange group. They've grown. They command about 2.2% market share. What I look at them as is really more of a dark pool with an exchange wrapper around it. When volatility increases, NYSE, New York, and ourselves is where you see the lion's share of trading. Dark pools tend to fall off, as does IEX's volume. So I look at them as more of a dark pool with an exchange wrapper. Their market share kind of compares to what happens off exchange in the dark space on the TRF. In addition to that, the struggles that they may have, and we all look to reinvent ourselves, is they believe in the speed bump concept. We don't. We have 4 exchanges. We could certainly introduce speed bumps if we wanted to. We don't think that's good for market structure. And from what we hear from a lot of both our buy side relationships and our sell side, so that's I think the bulk of that other category. But thank you for that question. So moving along to the next slide, I talk a bit about the ETF business that we represent. So you could see that Cboe BATS has 22.7, 23% market share, and it's an amazing number, especially considering that we are not the largest listing venue for ETF products. NYSE ARCA is the largest, followed by NASDAQ, and then ourselves. But I think it's about 3 years ago, we only had about 20 some odd ETF products listed on our exchange. As of today, we have about 250 ETF products listed on our BZX exchange. So significantly growth in a short period of time. As the discussion later on, what we try to advocate for the retail community, we've also advocated for ETF issuers, and most recently we had about 33 switches from NYSE to our BZX exchange from BlackRock, which I think is a really good testament to the support and understanding of how we're growing and what we're doing for these issuers. The interesting thing, by moving to our exchange and some of the products we have to help tighten spreads for ETF-related products that we have aligned ourselves with market makers in those particular products, BlackRock did a study, and from August the 2nd to the end of October, using that time period, they were able to forecast out and demonstrate that because these products moved to our exchange, we've saved end investors that trade in these products about $10 million over the course of a year, because we provide tighter spreads and better quality markets in those names. Moving to the next slide. Here I'd like to just spend a little time talking about our four different U.S. equity platforms. They all have slightly different ecosystems, which allows us to differentiate some functionality, liquidity profiles, and to some degree, when people say there's a lot of exchanges, helps us justify why we have four different exchanges. The first one, Edge A, used to be an inverted exchange where you paid a fee to provide liquidity and you received a rebate when removing liquidity. Based on what we've heard from both broker-dealers and institutional asset managers, folks were looking for more of a simplified fee-related exchange. So earlier this year, we changed Edge A from an inverted low-cost taker-maker exchange to a simple fee. So whether you're adding or removing, you pay a fee to interact with liquidity. We've also introduced a couple of order types on that exchange that mimic functionality that's available on IEX today. So we're starting to see some nice growth there as well. This order type 1 in particular, midpoint discretionary order, we launched it about a month and a half to 2 months ago, and we've seen the first few weeks where we traded a few thousand shares to just yesterday we traded over 4 million shares using that new order type. So trying to provide more functionality, some differentiation, and address some industry concerns with some of the changes we made to Edge A. BYX is the largest inverted exchange in the U.S. equity marketplace today. The recent market share number there on that slide that shows 5.17, we probably should do ourselves service and update it. We're actually close to 5.5%. We actually had a day over 6% this past month. It's interesting when you look at that growth. There's a couple of programs we have on there, one of which we'll talk a little bit later, but the Retail Price Improvement Program for attested retail order flow helps differentiate that exchange. There's significant price improvement in general that folks see on that exchange. And if you look at routing and both broker-dealers that represent institutional orders, prop trading firms, agency firms, they all route based on what we call the intermarket queue. And because of the nature of the high rebate for removing and folks wanting to get filled quickly, most order flow on the street goes to BYX first before it goes to all the other 13 U.S. equity exchanges. The next exchange, which is EdgeX, is really geared towards some of the conversation we're going to have in a little bit about what we're offering to support the retail community. It's very heavily weighted towards direct retail order flow, wholesalers that contribute a lot of limit orders to that exchange. We enjoy a nice market share. We have some very healthy pricing that rewards the retail community for posting order flow there. And then lastly, BZX is another exchange. It doesn't have as much, it's a maker-taker exchange just like EdgeX. It does not have as much of the retail-oriented order flow, but it's very geared towards proprietary trading, market-making firms, speed, not a lot of complicated order types in there. As some of our member firms say, they're market purists. They don't like all the different order types and hierarchy of how things change in certain equity books. So BZX is a little bit more simplified in that regard. And when you see volatility spike and when you see market shares significantly increase, BZX market share sometimes jumps up to the 8-9% range. So unfortunately, we're in a low volatility, low volume environment. So it's down a little bit, but hopefully for all of our stakes, volatility picks up and there's much more trading opportunity for all of us on the displayed markets. Moving ahead to the next slide, which shows a bit about our focus on the retail community, and then specifically, as I mentioned in the previous slide, EdgeX. We have as an exchange group really focused our attention on the retail community in many ways, and I think this slide shows how much of an effort we have put into maintaining this strong relationship with the retail community, advocating for them, talking about different strategies, which we'll get into in a few more slides. But you can see from the large four retail-oriented firms that do their routing on their own. In other words, they don't send their orders to a wholesaler and then have the wholesaler send limit orders to an exchange and internalize those market orders. Fidelity, E-Trade, Scottrade, TD Ameritrade, and the other one that's not there, Schwab, but comes in through a broker, preferences us as well. But you can see that we are their number one choice, with the exception of Scottrade, which is taking a view of diversifying a little bit. But we are their number one destination for their limit orders that they route to our book. And you can see the percentage of market share that they make up. They're 31% in the EDGX liquidity profile. So the next slide talks to the overall liquidity profile of our 4 U.S. exchanges. I alluded to some of this 2 slides ago. We went over each exchange and some of its offerings. But you can see to the right, EDGX, where you have the retail wholesale community at 16%. So what that means is a Citadel receives retail orders from smaller retail-oriented firms. They'll route that limit order to us. So that's a pretty big number there. The retail direct, which was the previous slide, shows those firms that have the ability to bifurcate and send their orders separately at 14%. The other number there that I want to highlight on EDGX in terms of the liquidity profile is the bulge bracket firms at 27%. A good percentage of that number is algorithmic institutional passive order flow that comes into our book and rests, which is liquidity that removers like to interact with. But it also represents big banks that have wealth management divisions that also have that ability to send their limit orders from their wealth management community to us. That's one of the reasons why we actually opened up our exchanges about a year and a half to 2 years ago, an hour earlier, to accommodate some of those needs that the banks do in terms of their routing. If you look to the left, the EDGA, BYX, and BZX complex, they're all kind of similar in terms of their liquidity breakdown and complex. But as I made mention, you see the proprietary arm, which is HFT, market making. It commands a much larger percentage of the liquidity profile compared to EDGX. In addition to that, you have the bulge bracket at 35%, and that is probably more driven from the market making desks that you see at some of the larger banks. Additionally, the agency component is a little bit bigger as well. That's the result of some higher routing to the BYX exchange. That's also some of these agencies broker-dealers that have relationships with retail-related firms that are posting limit orders on the book. Moving to the next slide, I'd like to just kind of go over a little bit about some of the things that we pride ourselves on in terms of maintaining a strong commitment to the retail community and demonstrating that they are a very important priority for us as an exchange group. We've run some studies that have helped us communicate to the retail community why they should be here in terms on higher fill rate and faster fill time when they rest their orders on our exchange compared to other venues. But you'll see down here there are several things that I think are important to just highlight. We've built and customized some very unique pricing programs for the retail community to incent them to use not only EDGX but other exchanges in our business. We believe, as I made mention a few minutes ago, in terms of execution quality, we run a lot of reports to help demonstrate why they should continue to stay here and demonstrate how we provide quality fills and price improvement for these participants. I think one of the more, probably less recognized, but probably one of the more important aspects of our exchange group is stability and resiliency. There's not a slide in here, but probably is a good one to put in, which shows our uptime over the last couple of years, and our uptime is at 100%. If you look at our peers, they don't have the luxury of having an exchange built in the last 10 years. So they have to improve their technology, which is a hard thing to do while you're maintaining an exchange. But it's important that our uptime is good. Our failover process, when necessary, is good, because that's a disruption that folks don't need. If you wake up early in the morning before you go to work and you submit a limit order in a stock and the exchange has some problems and that order gets canceled back to you during the day because the exchange is down or they experience a system issue, the last thing you want to do is see that order sitting back on your screen when you get home. and it wasn't filled because of some system-related issue. And then lastly, market structure advocacy. One of the things within that, and you may be aware of this, but access fee pilots is something that you're seeing and reading a lot about in the paper coming from the SEC. And we wholly believe that one size doesn't fit all, but we also have concerns over pilots that affect pricing and rebates and access fees, and the unintended consequences of what that could do to investors, specifically if rebates are lower and maybe less liquid names, or even some liquid names, spreads widen. So when I go home and I want to buy and sell a stock as a retail investor, maybe I am paying more because the spreads are a little bit wider because the incentives are not there for liquidity providers to be there to fill my order. So this is something that we advocate for down in the SEC, and we represent a lot of those interests from the retail folks. Moving to the next slide, it just talks a little bit about our package. We are not in the data center business. We are in the Equinix campus in New Jersey. We do not believe in co-location. Our campus there between NY4 and NY5 is latency equalized, so no unfair advantages on a speed play by trying to be closer to our systems. During regular hours, Reg MS is enforced. We actually enforce Reg MS protection during non-market hours as well. So once again, trying to make sure the experience is good both during hours and after hours. Going to the next slide, it kind of talks a little bit about some of the things we've done for the retail community. One of our programs, attestation, a firm can flag their orders as attested retail order flow. And through that program, we have different structures that monies flow back to the firms that attest their orders. Attribution is very similar as well, where retail orders are identified and the order gets placed on our book, known as either that particular retail firm or a generic RTAL. When firms go in and consume that fee, they can recognize that, hey, this is a mom and pop, or it's somebody who's willing to buy and sell a couple hundred shares. I don't mind interacting with them. Lastly, on BYX, our RPI program, which I mentioned a little bit earlier, is a way to differentiate. So if an order is retail attested, liquidity providers are in there that will only interact with marketable retail order flow and provide price improvement. And that price improvement is something that's the retail community that sends marketable orders to wholesalers today. And so I was just looking at the questions here to see if there is any. Yeah, and by the way, all these programs are on an opt-in basis, so you don't have to participate in them, but they're value add for the ones that do. And that RPI program has seen some nice growth where we're trading upwards of 10 million shares a day. And this is marketable order flow that would have normally gone to maybe a wholesaler, but now it's coming to us because there are participants on our exchange providing that price improvement. Moving to the next slide is an example of an order type that we built specifically for retail firms, where they route orders to us before market open, and then we then take that order and ship it off to the opening auctions. That order will come back to us and rest intraday on our book, looking to look at the trade in the marketplace, and then at the end of the day, we will send the order back to a closing auction, and then when the trading session is done, that order will get canceled back and unfilled to the client. This strategy was built specifically for the retail community and is available in both our EDGX and BZX exchanges currently. The next slide kind of goes into a little bit of the plumbing in terms of how we route and the process of how we route. One of the things that's important to us is making sure order flow gets to its end destination. So you see here, if you look through the numbers, we begin accepting orders at 6 a.m. We start trading at 7, but if a retail order is flagged where it does not want to participate in pre-market trading, we will start shipping those orders over to the listing center for the opening process, opening cross, to make sure that they get there. The last thing we want to do is hold that order on our book, and then at 9:25 before the auction opens, we have hundreds of thousands of orders to send to the opening auction. After the auction, those orders flow back to us, sit on our book, as I mentioned earlier, and then if need be, we will send them back to closing auctions. Depending on their strategy, whether they're aggressive, we will route them out, or they could just sit on our book looking for liquidity. The next slide, 15, talks a bit about the process of how orders are routed through a routing broker during the trading day. There's two types. If an order comes to us, limit order, and it's in flight, in other words, it becomes marketable. Once it comes to our exchange, we will route it out immediately. Additionally, if orders get executed and there's residuals, we also will route those out as well. We have different strategies that go to dark pools, other lit venues, and a whole host of participants where we're looking to attract price improvement for the retail clients. The next slide talks a little bit about the plumbing in terms of how our closing auction price routing works as well, where you can see it goes from our exchange through our routing broker dealer, and then depending on the listing center, we will send it to those destinations prior to the cutoff time, whether it's a market on close order or a limit on close order. Moving to the next slide, kind of reiterate some of the things we spoke about earlier in terms of our unique offerings to the retail community, where we have if an order is designated, and it's up to the member firm if it's designated as a retail order, places that we'll route it to provide them the best execution quality possible. Relationships we have, with dark pools, with wholesalers, with a whole host of firms that are looking to get the best price improvement, provide the best price improvement for the orders that we're routing to those destinations. And then the last slide kind of speaks to what I just made mention. So if you see a member come into us, comes into EdgeX, we will route it out to our designated liquidity partners that are providing that price improvement. If there's no trading opportunity there, we have a host of dark pools that we will go to as well. There's another subset of designated liquidity partners that we look to try to get price improvement. And then if we need to, we will go out to the display markets to fill that order. You can see on point number 2, though, the average price improvement on marketable orders for the month of July was fairly significant. So again, our end goal is to provide quality execution, low fill times and high fill rates, but also get you to that liquidity, a source of one-stop shopping. And then, below it talks to a host of different strategies that we offer that differentiate not only our offering, but also hopefully address the needs of the community that trades with us today. With that, I see another question here. The question is the growth in dark pools and the other category that I mentioned was TRF. Could you explain a little bit of that? Yeah, so what you see is the TRF, which is comprised of a couple different participants. One is dark pools, so those are the pools like a Morgan Stanley or a Goldman Sachs provides today within their firms to internalize and keep their trading costs down low. That probably represents about 18%. Another few percentage points is probably the proprietary trading books of a Goldman Sachs and a Morgan Stanley. And then lastly, it's the wholesalers who get that marketable order flow from retailers today. We would love to have that flow. The challenge we have there is as an exchange, we don't maintain error accounts. It's difficulty for us to deal with an issue where an account is hacked by somebody and a whole bunch of trades go through their system, wholesalers can deal with that much better than we can and take on much more risk, which unfortunately we cannot do. But there's ways in which we're trying to win back the retail orders through that RPI program that I mentioned earlier, and then also from a dark pool perspective that the banks offer, introducing some new order types that attract that liquidity back onto our exchange, such as that MDO order type that I mentioned earlier. That concludes my my presentation. I hope it was informative. I hope I didn't talk too much, but I hope I pointed out some things there that may spark some interest. So from there, if there's any other questions, I'm happy to take them now.
Okay, well, Bill, I want to thank you very much for the presentation and also remind everyone there is a questions title bar that appears in the control panel on the right-hand side of your screen. If you do have any questions, now's the time to add those for today's presenters. And while we're waiting for any additional questions, I also would like to remind you that we have been recording today's presentation, and each of you will get a direct link to today's playback. In case you have any or would like to come back and revisit any of the concepts that Bill discussed today, simply watch your inbox later on for a direct link not only to the recording, but we'll also be including these slides as a reference or the webinar notes as well. I'm not seeing any additional questions come in right now, so Bill, I want to thank you very much for today's presentation. Definitely do appreciate the input that you've brought to us today. So with that, we are going to conclude our session. I also want to thank each of you for joining us for today's event. We know that time is precious, and we appreciate that you spent some of that time today with us. So with that, you can all exit today's session using the X in the upper right-hand corner. And once again, thanks very much to BATS, which is now a part of the Cboe Global Markets. Thanks, Bill, and thank you, Craig, as well. Have a great day, great rest of your day to all of you.
Thank you.